Hello and welcome. You're watching First Stick here on News 9, where we bring to you the morning buzz on the last street. I am your host Suyash Maheshwari, and with me in the studio as always is Amit Ranjan. It's a Friday morning, the final trading session of the week, and what a week it has been. I mean, after experiencing a sharp correction over the past few sessions, many of us may be feeling relieved that the weekend is upon us, not only because you get 2 days worth of break, but also because the markets will not have the opportunity to correct further from here on. That said, we are witnessing some bit of a pullback this morning. Nifty is trading in the green, and in fact it is back above the 22,000 mark. The broader markets, although underperforming, are in the green as well, and most sectors apart from IT are participating in this upside. But then again, the key really is sustenance, something that the market has been deprived of in this correction. But before we delve deeper into the workings of Dalal Street, as always, let's begin with a quick check on the global equities. Amit.
Good morning, Suyash. The sentiment of higher for longer may be setting in. There is green everywhere, and S&P 500 trades within 1% of its record high, despite the fact that Tesla is in the red, Nvidia was in the red, Apple slightly in the positive. Dow Jones closed in the positive at 0.85%, S&P 500 in the positive at 0.51%, Nasdaq composite closed in the positive at 0.7%. Coming to the European markets, the Stock 600 closed in the positive at 0.53%. Stocks have advanced in the Asian markets. Hang Seng this morning is in the positive at 1.74%. Nikkei slightly in the positive at 0.27%. Mostly positive, but some reds in specific stocks in the West.
All right, and for the longest of time, at least in this week, we have been talking about how we are witnessing this decoupling effect happening with global markets and Indian markets, because for time and again, the correction at least that we would see at least in 2024, most of it had to do with global factors. There were tensions in West Asia between Israel and Iran, because of which the market fell in the first place. But this is not the case this time around. It's the local factors that's giving the market jitters, especially. Remember, we are in the voting phase, and interestingly, if you are to draw parallels with what is happening right now versus with what happened back in 2019, India VIX back in 2019 also surged by about 50% or so, and Nifty dipped. And around that the time when the counting day, the market, just before, I think a couple of sessions before it, back in 2019, the market jumped by about 3% or so. Now, for that, we'll have to wait and watch. But again, we are witnessing something very similar this time around. India VIX has jumped by about 80%. We were at about 10 odd levels, and now we are at about 18, in fact, over 18 on India VIX. So, a 80% jump on India VIX, and Nifty has corrected by almost 800 points. Very similar to the conditions that we were in back in 2019. So one could attribute this sort of jitteriness and market correction to the elections, and I think the fact that the voter turnout has been low, so it really throws this entire argument, how many seats after all BJP will be able to rake in, into question. I mean, the expectations after the thumping victory in the state elections back in December was that BJP could perhaps get to 400 seats, and that was what the market had priced in, and that's why we saw a brilliant rally on the back of it. But the reason has sort of set in. The expectation is that maybe BJP on its own will only be able to get somewhere around 320 to 350 seats, and that, I think, it has disappointed market. Just one thing that I would want to point out here, it's not that the market is betting on betting on BJP or Modi, the brand Modi as such. It's the political continuity that they are more concerned about. You don't want certain policies that have come to light in the last 10 years to suddenly be replaced, because that's something that the market does not like. Remember, it's the uncertainty that is the biggest enemy of the markets. But again, coming back home, we are staging some sort of a comeback this morning, but the real question is, can you trust it? I mean, for one, I would like to see a few things happening. One, that Nifty closes above the 22,000 mark, and 22,000 is not only a key psychological level, but it also coincides with your 78.6% retracement level of the most recent rally to record high. The 78.6% retracement level works out at 21,995 to be precise, but for all essential and practical purposes, 22,000. I think 22,000 needs to be held for us to at least consolidate, if not see a major pullback from here on. And if we are able to do that and the market is, sort of picks up from there on, I am looking at two levels as key resistance. One is 22,187, which is nothing but the 20-hour exponential moving average. So the first level to take out for us will be 22,187. Let's round it off to 22,200 levels. Beyond that, if we are able to take that out in the pullback, 22,296 or 22,300, which is a 40-hour exponential moving average, comes into play. This is not only important because it's where the 20-hour exponential moving average is, but 22,300 is key for two other reasons. One, it is a 50% retracement level of this entire rally that we saw from April low of 21,777 to the record high of 22,794. So that is a 50% retracement level. It works at around 22,287 for all effective purposes. Let's call it 22,300. And also 22,300 odd zone is where we close on Tuesday and Wednesday, and once we were not able to sustainably move from there even yesterday, because the market topped at around 22,300 and we were not able to sustain beyond those levels. The market dipped by about 100 points. We took some support at around 22,200, but once that was also breached, the market saw a bit of a sharp correction, where we ended below 22,000. But again, we are witnessing some sort of a pullback this morning. So 22,001 we need to hold above that, and if we are able to move above that, 22,187, the 20-hour exponential moving average, and 22,300 odd levels, the 40-hour exponential moving average, are the levels that you need to track on the upside. On the other side, on the downside, since the corrections have been so violent, I mean, I'm looking at two big levels, which is one is 21,777, which is nothing but your April's low, and 21,710, which is March's low. So we are about 250 to 300 points away from those levels. So ideally, Nifty should be able to defend that, bulls should be able to defend that, but if we are not able to do that, 21,500 could come into play. That is nothing but your 127.2% retracement level of this entire rally. Shifting focus to Bank Nifty, which is, by the way, on a 7-day scale, and I think Bank Nifty will play a pivotal role, in this actually pullback, because one, it has a lot of a big weightage on Nifty. Bank Nifty contributes about 30 to 35% of the Nifty basket. So a move in Bank Nifty, or perhaps a strong pullback in Bank Nifty, could also provide some support to Nifty as well. And since Bank Nifty is on a 7-day skid and has corrected by about 2,300 points from hitting a record high, I think it's due for some bit of a pullback, and we are witnessing it this morning. Bank Nifty, as we speak, is up 0.25%. In fact, it opened around 0.25% higher, but now we have sort of built onto it, and Bank Nifty has actually moved higher to about 0.7% as we speak. But again, the kind of fall that we saw in Bank Nifty, I mean, one would need to be cautious. Overall, I would say for both indices, for Nifty and Bank Nifty, today's pullback, don't look it as a pullback. Be cautious about it, because it could be a dead cat bounce after all. So again, remember, 22,000 needs to be defended for us to consolidate or move further from here on. So that becomes your key support levels. But Amit, there are a couple of other interesting things happening, because for time and again we have been talking about how FIIs have been incessantly selling in Indian markets, and at least when we were back in December, October, when this, bond inclusion announcement came to light, JP Morgan bond inclusion for Indian government bonds, the expectation was that, the money would not only flow into the debt market, but also to equities as well, and that clearly has not happened in 2024 so far. Look at how FIIs have been dumping Indian equities. They have sold equities worth 2 billion just in the first few sessions of May itself. Yesterday they sold equities worth 7,000 crore. I mean, that's almost $1 billion worth of equities in just a single session. So FIIs, they are turning cautious, because one, Indian markets, I mean, they are facing the problems of its own. We are in the middle of the earnings season, and the earnings season has been pretty much a mixed bag. So not much to celebrate about as far as the earnings is concerned. Also, there is some bit of jitteriness because of elections going on, and especially because the lower voter turnout, I think that is making market a bit skittish at this point. So keep an eye out on that. But that said, DIIs, domestic institutional investors, have been more than offsetting this sell-off that we are seeing from FIIs. We'll discuss this at greater length, but for now, it's time to slip into a short break.
We are trying a lot of experiments, innovations and ideas.
We came out with a new format in audio, which is audio series.
Listening for content-oriented company in India, which is a very unique proposition.
When you look at audio in general, we had music, which is like extremely old format, and then we had podcast.
A natural extension to Pocket FM is to move from Hindi to regional content. I think I'd love to see their FY24 numbers, which they claim will be close to 1,000 crores. I think there are talks of them to raise another $80 to $100 million of funding.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
A defiant performance by Ten Hag's men. Now standing at 7 feet 4 inches, Satnam Singh is making his way into professional wrestling.
We are getting more good news for India.
Welcome back. You're watching First Stick here on News 9. Before we slipped into the break, we were talking about how FIIs have been incessantly selling Indian equities, but what they are selling is being bought by your domestic institutional investors. And Amit, in the past, whenever FIIs were selling, the market was also correcting. But in the last 12-15 months, that has not been the case, because FIIs, whenever they sell, DIIs are always there to buy or absorb that, dumping of stocks. And that is when, in this time, we have witnessed, at least in the last 12-15 months, an anomaly when FIIs are selling and the markets are hitting at record high. So I think FII selling overall is kind of overplayed, but again, that is being offset by domestic institutional investors. So unless they are not participating or absorbing that dumping of stocks, I think one needs to be cautious of that. So maybe more than FIIs, one needs to look at what your domestic institutional investors are doing. But shifting focus for now, we are in the thick of the fourth quarter earnings season, and a slew of Nifty and broader market companies such as Tata Motors, Cipla, Bank of Baroda, Bank of India, Aarti Industries will come out with their Q4 report card today. Amit, let's start with Tata Motors. It has been a phenomenal wealth creator for for investors in India. Has done again really well in this passenger vehicle space. In fact, it's one of the best performing stock in that space. What are the expectations this time around? Another good quarter?
Multi-bagger over the last 1 year. If we look at the stock, astounding quarter. Their JLR segment is expected to report volumes growth of over 17% year-on-year. Passenger vehicles, as you rightly said, is expected to grow 14.6% year-on-year. Commercial vehicles is likely to go down about 9% year-on-year. For the quarter gone by, the market expectation on the growth in net profits is as much as 31% to 7,084 crores, up from 5,406 crores the same quarter last year. Revenues are expected to jump over 15% to 1,22,000 crores, up from 1,05,000 crores the same quarter last year. EBITDA too is expected to jump 24%, over 24% the quarter gone by. If we look at the stock, it is up about 0.4% today and closer to its 52-week high. way away from its 52-week low. So it is basically a continuing rally, and there still seems to be a lot of steam in the stock.
All right,
going forward.
Definitely, as you rightly pointed out, Amit, Tata Motors has been one stock that has actually turned a multi-bagger. A multi-bagger is a stock that delivers returns in excess of 100%. So essentially your money doubles. So if you have invested 10,000 rupees at the start of the year, your money would have turned into 20,000. That's what a multi-bagger stock is, and that is what Tata Motors, it has delivered returns of 104% in a matter of 1 year. In the last 6 months, almost 60% returns, and it's still rising, as Amit pointed out, just ahead of the results. Again, we are expecting a good quarter from Tata Motors this time around. Remember, the sales have been rather strong in the preceding 3 months, so that could reflect in the numbers of Tata Motors as well. But we'll shift focus to a pharma major, Cipla. Cipla is one of those stocks, Amit. I mean, it's been neither here nor there, has done well over the course of last 1 year, as has many pharma stocks, but is has hit a rough patch in the last 1 month. What's expectation?
The stock
from
has
Cipla?
hit, but the net profit of Cipla, according to market analysts, is expected to jump almost 70% in this quarter from the previous same quarter last year to 891 crore, up from 525 crores, 0.65. I'll give a caveat here. Cipla's net profit was impacted by a one-time impairment charges that was in the tune of 182.42 crores due to acquisitions in Uganda and Yemen that they had to pay for in that quarter. So if that adjustment is done, the net profit still likely to grow 28% over the same quarter last year. Revenues are expected to go up 8.5%. But if we look at the stock, seems to be floundering, whether it is the last 5 days down 4%, whether it is the last 1 month. Has given earnings of only about 44%, despite the fact that the Nifty Pharma has yielded over 50% returns over the last 1 year. Sort of a laggard, but because their US sales have jumped up so much, rally round the corner probably.
I mean, it's very interesting if we call a stock that has delivered returns in excess of 40% over the course of 1 year a laggard, but that's the times we are living in, and that's how strongly Indian markets have moved. And pharma has been one theme that has done phenomenally well in the last 12-15 months. But that's the expectation from Cipla. Again, the numbers are expected to be good. As Amit pointed out, US sales are likely to help in boosting that profit figure for the quarter gone by. But we'll shift focus and get back to Indian markets, because we are building on to the morning gains. Nifty has in fact moved over 22,100 as we speak, and it's the bank Nifty that is providing that impetus. Bank Nifty is up close to 0.7%, and that clearly is driving your your broader 50 share index. Nifty 50 as of 10:10 AM was up 0.7% above the 22,100 mark. Sensex is also inching closer to 73,000 levels. It's just about 94 points shy of it at 72,906 mark. The broader markets, which opened on a flattish note, are still underperforming, but then again, the kind of correction that we saw yesterday, I mean, some bit of a pullback in broader markets was sort of expected. But again, the mid cap index is up about 0.2% at 49,206, and the small cap index is up about 0.1% at 16,000 odd mark. India VIX is it's sort of declining, but again, remember the kind of surge we have seen in a matter of few sessions. We were at 10 odd levels just a couple of weeks ago, 80% jump in India VIX. So investors are really jittery, but remember the note on which I started the show. 22,000 needs to be defended for the market to consolidate or for us to continue this pullback from here on. So keep an eye out on that. We'll talk about it in much greater detail where on Last Check at 4 p.m. So join us at 4 p.m. on Last Check. But coming up next is World Business Report.
Start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The results are known that I'm going to win. Life of a goalkeeper is something which has always intrigued me. When you come into a stadium, this is the highest level of pressure. When I set out to do something, I decide in my mind that failure is not an option.
What you feel very strongly about, those are the stories to tell.
I have a mind which is absolutely restless. Mind and body are entangled sensations. That brings me back to golf. It's an amazing game.
This is not a perfect game. You only learn from them.
If you have a formula to a success, then you can replicate it.
I feel this is my first step. I'm starting now.
Winner is first born